Gonna Spark 2021. My name is Natalie Kim, and I'm one of the members of Project Hype, who's behind this conference. Our next speaker is going to be Professor Robert Jafek. He founded 2 investment firms and is a professor at UC Berkeley. Alrighty, Professor, whenever you're ready.
I am ready. So what's best? I think the question put before me was kind of, how did I get where I am, or something like that? Yeah, Natalie?
Yes.
Okay. So easy enough. So I went to college at the University of Utah, which absolutely is a second-rate, maybe even third-rate school. And we'll talk about that. I think I ended up okay. And some of you will not get into your school of first choice. And it'll be fine. It'll be good. We'll talk about that a little bit maybe. So I graduated from there, worked very hard, but still, second/third rate school. I really wanted to work on Wall Street, which was going to be quite a jump from, a second, third rate school. Worked hard, made some connections. Interesting piece of history. I was recruited by Merrill Lynch. I was very, very, very lucky to get that job. I worked with a gentleman there and got a job as an analyst. Big deal. So I moved across the country, went to prepare for my first day of work, was invited into the HR department, and they said, "Oh yeah, great, we're glad you're here early. Why don't you come upstairs or go upstairs, meet HR?" I thought that they were preparing a package of reading for me or something like that, but it turned out that they were giving me my severance package. So my first paycheck on Wall Street was a severance package. What had happened was a large investment firm went down, blew up, Drexel Burnham Lambert, and that threw the entire street into a bit of turmoil. And Merrill Lynch decided to cancel the entire analyst class. There was about 20 or 30 of us, and they canceled the entire class. That's how they do it. They recruit as a class, as a group all together, and then they train you, and then put you out into the business divisions. So they canceled me, and of course that was probably the right call for them. They could get people with 5-6 years experience for the same price as me, and they didn't have to train them. So that was my first job. I worked hard again with a headhunter. I got another job at a bank. I was doing reconciliations with debt. It was pretty fun, but I quickly outgrew that. And just like the speaker before me, I got on a little early. He was awesome, by the way. I took a couple notes of things that I'd like to just highlight and underline that he said. I had a friend that worked at Morgan Stanley, just like he did. He kind of got in there, and he said he got into Morgan Stanley by accident. I got into Morgan Stanley by accident too. The HR department, they had a very well-developed HR department that did recruiting for their analyst program. And what happened is just before their analyst program started, they still had, I think, maybe 3, 4, maybe 5 positions open. 2 of them were really awesome. And what happened is the guy who was in charge of that recruiting left, and he took all of the resumes with him. So the resumes from Cornell and Harvard and all of those sorts of places were gone. They had a couple positions they needed to fill. And so I interviewed for one of them, and I got the job, which was awesome. So I was an investment banking analyst on Wall Street. I was doing consulting for Morgan Stanley. It was very fun. It was very hard. A 60-hour week was a light week for us. An 80-hour week was pretty normal. A 100-hour week, yes, 100 hours, over 100 hours. I logged in a year. I'd probably do maybe a half dozen 100-hour weeks. It was very, very fun on the one side, but on the other hand, it was pretty tough. But I loved it. we did all sorts of projects, all sorts of stuff. It was crazy fun. And from Morgan Stanley, I was known as the quant back in the day. I could take large. I was known for being able to take large amounts of data, very quickly gather that data, process that data, and draw some reasonable conclusions from that data. That was what I was known for. I was the first one in Morgan Stanley. If any of you are geeky enough to know what an 8088 Intel 8088 chip was, there was only two that were issued in. Well, here's an easier way to look at it. Morgan Stanley got two laptops. All of Morgan Stanley got two laptops, and I got one of them. So to see what I could do with it, it was not a great. It was not a. It was not. It turned out not to be much of a privilege. But for Morgan Stanley, I went. Morgan Stanley had a large client that was Tiger Management. Tiger Management was a large hedge fund. There was two large hedge funds at the time, Soros and Tiger. Tiger was a deeply integrated client with Morgan Stanley. So it was natural that I knew Tiger, and I was sponsored by my boss at Morgan Stanley to become a fourth year analyst. Associate. So analyst was the job title, and then you became associate. Most of the analysts were kicked out. 95% of the analysts worked for 2 years, and then they went on to graduate school. A few of them were invited to stay to become third year, and then a very few of those were made fourth year associates. And basically they were saying you can just go ahead and skip graduate school. I was made a fourth year associate. That was awesome. But then I ended up quitting to my boss who sponsored me to do that. But he was fine with it. He knew of it. So I went to Tiger. At Tiger, we were $20 billion at the time, pushing around, 5 or 6 times leverage. So we were pushing around $100 billion or so. I was a small part of that. I had a $300 to $400 million portfolio that I worked on that we levered a couple times. So I was pushing around 1 to 1.5 billion. We did everything, currencies, commodities, fixed income, that's bonds and of course stocks all across the world, 24/7. Again, I worked. My job became more stable, but my job became stable at 70 to 80 hours a week. Most of the time, a car picked me up at about 3 or 4 in the morning. And then I went into the city. I lived in Connecticut. I went into the city in the back of a car, slept in the back of a car, of course. And then worked until most of the time I was getting on the 10:40 train to go home. So by the time I got home, it was about 11 or 12, crawl in bed for a couple hours. And then, so I'd sleep kind of 3 hours at home and then 1 hour in the car and then maybe 1 hour on the train on the way home. So that was kind of it. And that was awesome. It was awesome. I met Donald Trump back in the day when he was running DJT, Trump Towers. We were shorted. Met Margaret Thatcher. Used to talk to Sakakibara, the Minister of Finance from Japan. I used to talk to him once or twice a week. Him personally, he would call me, believe it or not. And I would talk to him, which is pretty heady as a, kind of a 30-year-old punk. But talk to him on a semi-regular basis. Just had a lot of fun. I worked with a very, very, very smart group of people doing kind of difficult things, but nobody told us it was hard, so we just figured it out. From there, I was working way too many hours. My wife and I were married. We had twins and a single son, so we had 3 boys, and it was just really unfair to her. So the idea was I was recruited to work on a very technical problem in South Africa, very interesting problem, financial problem, but it just wasn't going to work. So at the last minute, we decided to just go ahead and take a break and moved to San Diego. So we moved to San Diego. The idea was to be here a year, and now we've been here 20 some odd years, 23, 24 years. I went to work for Nicholas Applegate. Nicholas Applegate, head of international trading, we took a portfolio from 800 million to about 20 billion. It was real money, not levered money, so it was a little different. But and then started my own hedge fund that was Torrey Pines. Torrey Pines, we got up to about 600 million, so pushing over $1 billion in exposure, about $1 billion. Those numbers may sound big to you, by the way, but $1 billion is actually a small fund. $100 million is a very small fund. It's almost a micro fund. It almost doesn't matter. $1 billion, you're starting to show up. You know, it's like being in third grade or fourth grade. You know, hey, yeah, you're something. You're really, really probably now, you're kind of not really a fund. You're not taken serious until you're probably over 5 billion. So Torrey Pines was good back in the day. $1 billion was just right on the edge of being something important. But and then I was doing that, and I was also doing private equity. Torrey Pines, we decided to shut down, and I dedicate my full time now to private equity. Private equity, we've got 3 tranches. One is the tech side of it. The other one is really fascinating. Orchards. We have some acreage up in the Central Valley of California. We grow oranges and avocados and lemons and stuff like that. And then an active portfolio where I'm on management and very much have my hands dirty. So that is my career in a nutshell. And then a couple years ago, maybe 10 years or so ago, I started teaching as well. So I've taught at USD. I've taught graduate level courses at MBA and in the law school at USD, corporate finance, not law. Corporate finance there. And I teach undergrad. I really like teaching undergrad. If any of you want to ask why that is, you're welcome to ask why that is. And now I teach up at UC Berkeley in the law school. So, and again, I teach business up there, and it's my own designed class. So hopefully I'm helping them out. So a quick question from an anonymous attendee. Oh, so great question. What is a hedge fund? And I'm very glad y'all should absolutely, not just here, but anywhere else, when somebody throws a term around and you don't understand what it is, you should ask. And if you look stupid or you're worried about looking stupid, you know what? Just, that's okay. Play that card. You know, just embrace it. Just be like, what is a hedge fund? And they go, wait, you don't know what a hedge fund is? What are you, stupid? And you're like, look, man, it's just a question. Can you explain it? And you know, help me understand it. And if it's good. So what is a hedge fund? A hedge fund is it means a lot of different things to a lot of different people. Generally speaking, a hedge fund is a fund. They take other people's money and they invest in other people's behalf, and then they split the profits according to the percentage of ownership of the head of the funds, right? So if 3 of us come in, one of us puts in $50 million, one of us puts in $25 million, and the other one puts in 25. It's going to be split. That adds up to 100, right? 50% of the profits goes to the big guy, and then the other guys split what's left. So that's how a fund works. So what a hedge fund does, generally speaking, a hedge fund is investing in in public equities. So that's stocks and bonds, stuff that trades on the New York Stock Exchange and NASDAQ and that sort of stuff. Companies you could look up. And the difference between them and a mutual fund is twofold. Number one, a hedge fund borrows additional money to make those bets, investments, whatever you want to call them. So they're going to do it with borrowed money. And the second thing is they're going to go long and short. So they're going to try to benefit. They're going to try to create money, get returns from stocks going up in value. They are also going to try to make money from stocks going down in value. So when you buy a stock long, that's thinking that you buy it first and then it's going to go up and then you sell it later and you receive the profits. A shorting, you do the same thing except in reverse, right? You're going to sell it first. You're going to borrow it from somebody else so that you can sell it and deliver. And then when it goes down, you're going to buy it back. So you're still buying and selling to make profit, but you're doing it in reverse. Sell first and buy second. So that's a hedge fund. what does a typical workday look like for you? It depends on where I'm working. If I'm working in San Diego, it's a little bit mellower, and it's going to change over time, right? So my normal workday, I get up at 6 or something like that. If I'm lucky, I'll go ride my bike, or I will go for a run. I've got a couple really of my favorite rides and stuff that I get to do sometimes. I'll usually be in work in my seat by about 8 in the morning. And then usually if I'm working out of town, there's really nothing to come home to. So I usually work in the office till 6 or 7, get something to eat, usually cook something to eat. I like to cook, and then usually back at either working or reading. I read a lot. So that's kind of a normal day. So is a hedge fund a form of options trading? No, not per se. A hedge fund may use options. A hedge fund may use options, forwards, ladders, all sorts of things. Those are just tools, different derivatives that are their price is derived off something going on in the traditional markets. So options are just a way to obtain leverage and take your risk a different way. It's really hard way to make money. Options, when you buy a stock or short a stock, all you have to do is get the stock right and the direction right. I bought IBM and it went up, right? When you do an option, you still have to buy it. So you're going to buy a call. That means you think it's going to go up. It's still on IBM, but you have two additional things that you have to do. You have to get the direction, you have to get the magnitude right, and you have to get the timing right. So you're going to buy an IBM December 150 call. That's the stock you got to get right. A call means you think it's going to go up, but you think it's going to go up to 150 by December. So you have to get those two things additionally right. It's a hard way to make money. An options market is just the marketplace where all of those options are traded. So how can hedge funds adapt to situations such as what happened with GameStop, AMC, et cetera? That's why Eric talked about having a portfolio and not all your eggs in one basket. That's exactly what you do there, right? So GameStop was an absolute anomaly. And by the way, those anomalies happen all the time. We could talk about it, short squeeze happening in Volkswagen. We could talk about the Hunt brothers trying to corner the markets and do a short squeeze in silver in the late 70s. We could talk about short squeeze in Tesla. We can talk about short squeezes over and over and over. There's always something weird going on in the market. And there's always some anomaly, brand new, you read about it on the newspaper, keep track of those things. I'm glad y'all are following that. But there's really, those things they happen all the time. So that's why you have a diversified portfolio. And yeah, you got to learn. You've got to be aware of things. 135% short interest in GameStop. There was too many people on one side of the boat. And you always want to be aware of when there's too many people on one side of the boat. So that's what happened. Too many people got on one side of the boat. Most of the people, I will submit, and I haven't looked at all of the stuff, but the guys who have, I will submit that the majority of the people who gamed GameStop lost money. I would submit that and I would say that most of those people, and I would say, and what happens when GameStop is a super interesting thing, right? GameStop, Robinhood shut down, regulatory guys. By the way, you can look up. It's not a good thing. It's not a good game. Don't do it. It's just. There was a 15-year-old kid that did this for a while. He used to do the Yahoo Messenger boards. He made $271,000 or something, and it was disgorged by the SEC. Disgorged means they took it back. And he'll have a hard time getting a job in the financial services industry with that SEC settlement on his background. Just like Eric said before, make a lot of money. The guys who make a lot of money slowly. Yeah, there's some outliers, some guys who made a lot of money fast, but A, do they hold it or not? And B, the odds are not with you on doing it that way. So yes, you adapt, you learn some things, that sort of stuff. Any recommended reading for people interested in investing? Absolutely. So read the Wall Street Journal, right? Read, follow Business Week, all of those sorts of things. A couple books that I really, really like. Peter Lynch, One Up on Wall Street. He makes a really, in which I'm going to tell you the story, but give away the end of it. But I still think it's worth reading. His point is, and it's an 80s book. People say it's out of date. It's not out of date at all. His point is that you already know a bunch of stuff about investing. You already know, you're already exposed to a number of companies. He's going to use examples that are out of date, absolutely. But the idea is awesome, which is you already know a bunch of stuff. How many of you, the first time you heard about GameStop was with, you know, what happened with the GameStop short squeeze? Most of you knew what GameStop was. Most of you knew that GameStop was somewhere a place that you used to go, but you no longer go. And most of you knew it was kind of a broken company, right? Most of you knew it had issues and nobody goes there anymore. So you were on the same side of the bus as everybody else. You know, they were just trying to profit from it being a short squeeze. So, the new thing here was short squeeze and the Reddit, you know, game, whatever that thing is, and the stupid kitty. So those were the new elements, but you already knew quite a bit. So if you really thought about it, you knew a lot coming in. And if you really think about it, you know a lot. Many of you are very excited about electric vehicles, right? Most of you know about Tesla. Most of you know about Elon Musk. So most of you have quite a bit of you know, insight into a market, and you can kind of think about why that works and why, you know, why is Tesla going up so much, that sort of thing. I would caution you one other, you know, I didn't hear you guys ask Tappan about, or Eric about Bitcoin or anything like that. What's happened in the market is, as GameStop, which is a fairly regulated market, fairly, not 100%, but it's a fairly regulated market. Weird things happen still. But so that some untoward things happened there. So people moved into the unregulated markets. They tried silver. Silver's not an easy thing to do. So they moved into, you know, Bitcoin and Dogecoin. I'm sure I'm mispronouncing it. Y'all can make fun of me, which is fine. But I mean, that's just a bad idea. It's just a bad idea. But the point is it moves from regulated. When you squish too hard on regulated, anything regulated, you create unregulated, right? Drugs. When you say, hey, you know, drugs we can't do, you create an unregulated market, right? Anything like that, you're going to create unregulated markets. So you think you're doing a good thing, and probably overall you are doing a good thing, but demand creates its own supply. You still got a demand to play some of these games. That demand just went out of the regulated markets into the unregulated markets. So that's some thoughts there. Other questions? What is it like working on Wall Street? It's really hard. It's really hard. It's really hard, and it's really, really fun. It's really hard because you are competing against the best and the brightest, and it's coming at you from all sides. People want to push you out of your seat. They think you're smarter than you, and some of them actually are. I think there was a lot of people that were smarter than me. I trained a number of people who went on to found very large hedge funds and do really, really well. So people are taking shots at you. The market's taking shots at you. It is very tough, but it's really, really fun, right? Where would you rather compete? Would you rather go, you know, if you're a soccer player, you want to go, you know, compete against the kindergartners, or you want to go play college? I'd want to go play college because it's harder. The competition is harder. It makes you work harder. It brings out the best in you. So never shy from hard things. It's awesome. How important is the kind of education you receive in entering the marketplace? I would say somewhat important. Look, you go to the best school you can, absolutely, and work really, really hard, but do some fun things. There's hard skills. At school, you are going to obtain hard skills. That is absolutely why you are going to school. I'm going to learn how accounting works. I'm going to learn how finance works. I'm going to work how the options market works. Those are hard skills, and those are important skills. Soft skills are important too, right? Can I get along with everybody? Your generation, broadly speaking, is, you've got advantages and disadvantages to this whole Zoom text thing, right? The advantage is it's pretty cool. You can contact a number of people and you can work with a number of people. The bad thing is y'all don't have experience with face-to-face conversations, and that makes it difficult. So, it's a mixed bag, but you've got to develop some of those soft skills. Learn how to talk to people who are like you. Learn how to talk to people who are not like you. Learn how to agree, learn how to disagree, learn how to work through difficult problems, learn how to work through easy problems, right? How many of you can bake a cake over the internet with somebody else without pictures or without talking to them, right? It's going to be really easy. Hey, just follow my YouTube or whatever. No, hey, can I use a 325-degree temperature? Hey, what about convection versus, normal bake? Hey, can I roast? All that sort of stuff. Those are problems that need to be worked through. Those are relatively simple. But when you're trying to do something difficult, when you're trying to do anything difficult, go into a new market, create a new position, figure out options trading, anything like that, it's got to be a face-to-face conversation, and you need to develop that soft skill. And then not only do you need the hard skills and the soft skills, you need some unique skills. What's special about you? What's special? My skill is, I can kind of take large amounts of data very quickly and turn it into something reasonable. Great. That's a unique skill, right? I'm sorry to tell you, but even if you have hard skills, when I look at resumes, we're putting together a company. It's operating in stealth mode right now down in Austin. When we ask for resumes, we'll get 1,000 of them. They're all hard skill based. And I'm just going to flip through 90% of them. I'm going to be like, same, no interest, dump it, don't care. People hire you for 3 reasons. Can you do the job? That's a hard skill. Will you do the job? Can you prove that to me? And can I get along with you while you're doing the job? That's a soft skill. And there's a number of hard skills that, they're all intertwined. So think about hard skills, soft skills, and unique skills, and develop all of them. So that's formal and informal education. I've never updated my LinkedIn. I've got a master's degree from HEC Paris. I've got some other stuff. I just don't update it. Just continue to get education. And by the way, I'm going to run out of time here. Your education, your parents say this, you read about this, you get out of it what you put into it. So some of you are going to consider going into liberal arts education, and you're going to say, well, I'm missing out on the hard skills and stuff like that. Yeah, you absolutely are. But there's so many things that you can learn from a liberal arts education if you can look broadly across it, right? I can't tell you how many times we'll make references to the Greeks and the Romans. We'll talk about psychology. Psychology is theoretically, they try to be a hard skill, but it's probably much more of a soft skill. Marketing, those communications, right? A lot of you are going to make fun of communications majors, but I know a lot of people that are really, really smart that can't communicate for anything. And it doesn't matter how smart they are, they can't communicate it. They can't share that with you. They can't get it from their brain into your brain. And that makes it worthless. So whatever you engage with, be intentional about it and be excited about it and figure out how it applies to the rest of the world. If you get too deep into your own little hole, you're missing out on a lot. So make sure and pop your head up every once in a while and go talk to the guys that are communications majors. Go talk to the guys that are doing hard sciences. Go talk to the guys that are Egyptologists. Go talk to the guys in behavioral sciences. And just, hey, what are you doing? Why is that interesting? And you'll learn a lot. How am I doing on time, by the way? Whoever's, I think it was Natalie. Yeah.
Yeah, so it is 11:17. So we have a couple questions left, but I think for those students who are interested in learning more, if you guys could email us through our email or contact us through our website, we'll make sure to get those questions to Professor Jafek as soon as we can. So if you still want to get those questions answered, that works as well. I see that you're typing the answers in the Q&A as well. So I think that'll work. But yeah, we just want to thank you so much for your time, Professor Jafek. We definitely learned so much. I know I took a lot of notes about your advice, and I think it's really important. And yeah, I just learned a lot about the kind of work that you do. Thank you so much.
I talked fast. Thank you. Thanks for having me.
Have a good day.